I want to hit on the quarter because I think it really showed that we are an all-weather firm. We did have this 25% increase in distributable earnings. We raised nearly $70 billion, including one of our best quarters ever for private credit institutional fundraising. But the key thing, and this really ties to the big picture, is the decision we made strategically to lean into AI infrastructure. And that is driving the returns across so many of our vehicles. When you looked in the quarter, 8 of our 10 best performing investments were in things like data centers, LNG, battery storage. This is really the story today. Obviously, a lot of focus on the war and what's happening there, but this build out we're seeing across the United States and starting to spread to the world, this, I think, is the main thing to focus on, and we think will really drive our firm going forward.
You know, do you think there's a tipping point here in terms of AI infrastructure and the like? And the reason I ask is, I think for many quarters last year, there was lots of questions about whether for some of these LLMs making these big commitments, whether the math mathed. And people thought, could we be in an AI bubble? It feels like things have shifted. When you look at the growth of Anthropic, you look at the growth of ChatGPT and others like it, that the math might start to look right. And in fact, we might actually be under investing in this space.
I think it's the right question. A year ago, we were talking about DeepSeek and were we over-investing. But if you look at the announcement from OpenAI a couple weeks ago that they shut down Sora, which actually was a very impressive product because there was too much compute use. If you look at our companies, this year, right now, we're up 15x in spending on LLMs at our portfolio companies. Now, it's off a small base, but it shows you the direction of travel. So many of our companies are looking to apply this AI. And what we're actually seeing today is compute is the issue. It's shortages of turbines for power, power plants, getting data centers entitled, it's chips, all of this. So I think the use cases are profound. I think there will be economic returns. Like everything, when there's a big boom, there'll be some misallocations of capital. But I really think this AI is going to start to diffuse through the economy, which is leading to these big investments on the front end and then big productivity gains after.
So, John, though, given all the portfolio companies that you have and your efforts to effectively use, everyone's using this word diffusion now, effectively spread, if you will, AI and the use case into all of your portfolio companies, are you seeing a genuine economic benefit today? Meaning, are you changing your hiring plans? Are you actually seeing more efficiency as a result of it? Or are still people, dare I say, just playing with it?
I'd say it's moved beyond playing, but it's not really showing up in a big way in the numbers because it's pretty early. It takes time to change workflow and processes. But we have some portfolio companies who are making real strides. We have an accounting firm that's doing much more in the way of tax and audit now to try to make things more efficient for them. We have a company like Ancestry that can now customize some of this content and create an immersive experience for you. They can also digitize records much faster than they could in the past. Here at Blackstone, we're using it to be better investors, to summarize data, to look at historical memos, and to ask us really good questions to hone our investment process. So I wouldn't say we've seen wholesale massive changes, but we have seen a direction of travel. I do think if you look at the big hyperscalers, they've grown their revenues more than 30% the last couple of years. Their headcount's up very marginally. So there in coding, certainly they're seeing a lot of efficiency gains. So I would not bet against the power of this superintelligence. I do think it's going to have a profound impact, but some of it may take longer. So that may be frustrating, but the end opportunity set is really large.
Okay, let's talk about an issue we've been talking about, I think, together for now maybe a year or two, which is the world of private credit. And today there's even more questions than I was probably asking a year or two ago about it, given that so many funds have effectively put gates up. Lloyd Blankfein often says that these semi-liquid funds, as they're called, should be called illiquid funds, because he argues when you want liquidity, They're illiquid, and we don't want liquidity. They're very liquid. You actually had a lot of inflows this quarter. That's the good news. But how should investors think about the structure of these instruments?
Well, I think the key question is, should individual investors have access to private markets? Our whole firm is built on this simple premise that you give us capital, you trade away a bit of liquidity in order to get the benefits of diversification, to access investments like some of the fastest growing companies in the world, and of course, to try to generate higher returns. And the question in my mind is, should individuals have the same rights? And I would say definitively the answer is yes, but with two important caveats. One, the disclosure has to be good. We sell these products through investment advisors who are sophisticated. That's certainly helpful. The disclosure, if you look at our non-traded BDC BCRED, on the first page of the prospectus, there are 6 bold bullet points that say this product has limitations on liquidity. And by the way, we've been at this now with semi-liquids for almost 10 years. We have more than 300,000 customers, and we are not hearing complaints that people didn't understand the products. It's just not something we're hearing. So I think the disclosure, at least from our firm, has been excellent. And then on, do we deliver on the promise? We've delivered meaningful premiums over public markets. You and I spent a lot of time on BREIT going back over time. That product has delivered a 60% premium to the public REIT market over almost 9.5 years at this point. BCRED has delivered a 60% premium over the leveraged loan market. So I think the key is the disclosure good? Do you deliver the returns? If you do both of those things correctly, I think these can be important tools for individual investors.
Let me ask you one other question, which is, given the pressure on some of the private credit funds out there today, it would imply that the marks that live oftentimes in the private equity world, given that's where so many of the loans effectively have gone, aren't where they should be. How do you think about marks today, both at Blackstone, but I'm curious actually if you'd comment more broadly.
Well, I would say, first off, when people are selling securities, it doesn't always reflect a lack of confidence in marks. If you look in the leveraged loan and high yield markets, there were $12.5 billion of redemptions in March because people got nervous about credit. So just because people are looking to sell things doesn't mean they don't believe in marks. In terms of marks that we see in our non-traded BDC, we list every one of our 700 loans every quarter, how much we invested, where it's marked. There's a ton of transparency. In fact, today, our portfolio is marked around 96, which is below the leveraged loan market. And going back to our BREIT conversation, we sold $38 billion of properties since interest rates start going up at a premium to where these things were marked. So I feel really good about our process. I can't really speak for all the firms out there, and I think this will be an important differentiator between firms operating, particularly for individual investors. But if you do an excellent job, if you're rigorous, if you have multiple layers of review, outside parties affirming your valuations, you do this, I think it can be done in a proper way, and as a result, investors can have real confidence.
Okay. Jon Gray, always good to see you. We appreciate your time this morning. Congrats on the earnings.